What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method we use can be implemented with, trading any publicly traded company on the U.S. stock market. So make sure to hit the like button if you enjoy this video. Really helps the channel grow. Big thanks to all of those that continue to tune in and hit that thumbs up. If you haven't already, make sure you hit that subscribe button and the notification bell. That way you're alerted when we release bonus content. The nightly and weekend videos, like tonight's video, they identify triggers and targets for trades ranging, from scalps and intraday trades all the way up to swings and leap trades. So if you want a deeper dive into exactly how we set up our charts and the trading levels and the color coding for the different time frames, things like that, check out the bonus content playlist on our YouTube page. And for more information about the strat, check out the description of this video. There's some more free information in there for you as well. So I encourage you to watch the full video, because along with the triggers and targets, we do give some pretty good insight into the price action on all different time frames. So with that, let's get into the agenda. We'll go ahead and recap today's price action, and like we always do, we'll zoom out and check the week, month, quarter, and year perspective. That way we are level set with exactly where we're at. We're not too zoned in on the small time frames. Then we'll take a look at the market maker's expected move for Friday, October 31st, and then we will zoom back in to set the 4-hour markers and the triggers and targets for Friday, October 31st, and we'll do just a quick review of the triggers and targets for the week, month, quarter, and year as well. So just looking at today's intraday price action, again, pretty flat, right? Didn't have the big gap up like we had the previous days, but it wasn't overly bearish. I'll just say that, right? Just sideways action. So we can see just identifying the 4-hour markers here first. This is just a scalping perspective. This is what we'll take a look at first. That's the beginning of the day starts with more of a scalping perspective, unless there's something on like the 4-hour, 1 hour that has changed trend or triggered something else. So in just looking at the 5-minute scalping perspective, we've got the 4-hour markers here. At the top of the screen is the overnight high at 50.92. Just below that is the previous high a day at 50.76. Down at the bottom of the screen, we've got the previous low a day at 48.05, and we've got the overnight low at 47.41. Now, I guess kind of honorable mention level here is this 48.51, which is the market maker's expected move high for the week. So that's, at the beginning of the week or at the end of last week, the market maker has put out what their expectation is as far as the price range for SOXL. If you're not familiar with that, make sure to check out our weekend video where we dive a little bit deeper into that. But that range that was provided, was the high was 48.51, and obviously we had gone above that previously this week. But it is a level that we want to keep on the chart and keep in mind, right? It just so happens that price opened up at that level today. I guess 2 cents lower, but basically the same level, right? And when we opened, we got an initial push down, but never got any lower high at or underneath the opening print. So there was no puts to be had. And this technically was a lower low in comparison to the end of Wednesday's action, right? So here was a low on Wednesday, then it went lower high, and now we went lower low. All right, so if you look at it from that perspective, it was kind of continuing a 5-minute downtrend, but you can see that it was basically a gap fill reversal situation here, right? So pushed down into the gap, hit the bottom of the gap, and bounced. And this is the biggest move of the day. So if you got in at the gap close and caught that bounce, that's where you're going to make a majority of the money today, right? The rest of the day, you could have made some on puts or some people like to play SOXS as well, but that's kind of, we just stick to SOXL on here. So you could have played some puts, but not a lot of range. And then the rest of the day just chopped, right? So at the end of the day, did start to fade off. My guess is that was probably a little bit of de-risking into after hours. We've got some heavy hitters as far as earnings are concerned. And we can see in after hours, we're already up over $1. So up 2.25%. in after hours after some good reporting and guidance from some of the tech companies out there reporting today. So that's what we got from the intraday perspective. Not a whole lot, just sideways action. You stick to your guns and you either don't enter anything or you stopped out pretty quick. So unless you got that pop in the morning and maybe the drop that occurred afterwards, that was really all there was to gain from today. And looking at the 4-hour time chart, just because this did trigger the 1-2 up combo 2 down, right? So yesterday it triggered the 1 2, let me make this a little bigger for folks on the phone so you can see. There we go. So we can see on the 4-hour, yesterday's first 4-hour candle was a 2 up. That was following a 1, but then the second 4-hour candle was a 2 down. So that triggered the 1-2 up, 2 down combo, and a reversal combo. And the magnitude for that move is the low of this 3. So you can see it just continued today, right? It tried to hold up and even almost reverse today earlier on in the first 4-hour candle. But that failed, and we just pushed towards the low of the day at the end of the day. So just keep in mind that we could just be finishing out that strat tomorrow. Does it happen all in the first 4-hour candle? Possibly. It may take it may take the full day. We may just slowly fade all day, right? But the magnitude for the move, the reversal that we're in, is this 45.94 level. So I hope that's big enough here for you. But you can see the 1-2 up, combo 2 down, magnitude being the low here, 45.94. All right. From the day chart, we got our 2 down. And it wasn't exactly, come on, Thinkorswim, what you doing here? It wasn't exactly a failed 2 down, right? We didn't have like a green hammer 2 down candle or something like that. It was inverted hammer essentially, and finished red. So closed below where we opened. Bulls tried to push up, bears rejected, and were able to win the fight and push down to the end of the day. So it did trigger the 2 up, 2 down. Obviously didn't reach magnitude, that magnitude being the low of this candle to the left of the 2 up. So we could see continuation to the downside with the 2 up combo 2 down, trying to see the magnitude of this, which if we reach that level puts us into a combo 2 up, combo 2 down situation, right? So 2 up, 2 up, and then this is the 2 up. So combo 2 up, or combo 2 up, right? 1, 2, 3 2 ups combined together, making one big 2 up. And then if we get price below below Thursday's low, Thursday, October 30th low, then that triggers the combo 2 down. So we could see possibly the top of this gap here, and I don't know if hell breaks loose, we could see the gap close. I don't think that we'd see that tomorrow, possibly though. So we do have to leave it on the table. I do want to mention that 46.79, last year's 50% level, is right here, was resistance previously. Are we going to turn that into support? Possibly. Got another level of support here being the week flip, right? So as long as price is above this level, the week is green. And right now we've got the week, month, quarter, and year green. So full time frame continuity to the upside right now. Giving bulls the momentum, looking more like this could be a higher low here, possibly tomorrow if we get a 2 down as well, could be a higher low, and the continuation of the uptrend, right? The pullback, we talked about it yesterday. The pullback is nothing to be feared. In fact, kind of wanted in our case. It gives us a chance to get a better entry on some further longs if we do pull back and get the trigger back to the upside, instead of just continuing to buy tops and just hope that the market moves up, right? It gives you better entry points. So do we see a little bit more downside action tomorrow? If we do, I don't know. My guess is we probably would fall back through this 50% of last year, or play around with it, but I don't think that we would close below the week. I don't think the week's going to flip red, right? That doesn't mean that the week is going to be a bearish engulfing candle. It just means that it would close red, meaning closes below where it opened. I think that we would probably get a bounce there, even if it is temporarily. If we just get the bounce tomorrow and we push back up, maybe even Monday before we pull back down, or even Monday we might pull back down, setting us a lower high on the day, and then really kind of starting a downtrend. That's when we can kind of change our stance on buying longs and looking for pullbacks. But even then, we've got a long ways that we can go to create a higher low on the not only the day chart but the week chart as well, right? So we can see on the day chart we can come all the way down to 35.97 before we were to make a lower low. If we go to the week chart, we'd have to come all the way down to this 23.50, right, before we would make a lower low, right? Oops. So we've got all these two up, two up, two up, two up, two up, one, two up, two up. No two downs in there. So we didn't have any higher lows along this way up. So we got all this room that we can put in, right? And two gaps below us that are calling our name as well. But if bulls continue to hold in the market, let me just go back to the day chart here. Things are still looking pretty bullish, right? That would set this as a higher low if we go up. We've got our fib extensions of the April 7th bull flag, and we'll continue to shoot for those targets. If we do go to the upside, again, to the upside on the day perspective, would give us a 2 down, 2 up, triggering at the high of Thursday, October 30th, and targeting the high of Wednesday, October 29th. And then we could get into our extended targets. We'll get into those here in a minute when we look at our notes. But again, that's what it looks like from the day, from the week. Just kind of clean this chart up a little bit for you, so you can see the see things a little bit clearer from the week perspective, right? So here's the flag pull from the April 7 low. Then here's the flag through July, August, and then we've got our bounce here. So we're looking pretty bullish. We've got above this weekly broadening formation, just dealing with the 50% level of last year, and then we've got our weekly broadening formation, another weekly broadening formation up here too. So we do have some more room to run to the upside, and we're not even finishing at the high of this candle, right? It is an inverted hammer, but it is green. So in the strat world, a lot of times we like to call that a shooter, a Momo shooter, a momentum shooter. So just an inverted hammer in the midst of an uptrend. So again, nothing overly bearish, nothing breaking down here from the week perspective. Still looking very good. Let's go ahead and look at the month. Let's get those weekly broadening formations out of there. And again, looking great. Just dealing with 2024's 50% level. Not a whole lot I need to continue to say here. If you're familiar with the channel, you're probably tired of hearing me say the same thing over and over. But we just continue to push. There's been no pullback, so there's nothing really more to say. We had a little bit of a pullback earlier in the month that we thought we were gonna have a wick, but we pushed right back on through that, leaving some gaps in our wake, right? So still looking very good from the week perspective. Oops. And then from the quarter, if you're familiar with this channel, you know that this is my favorite chart of SOXL right now. We've got make this a little bigger here. We have on the quarter chart, we've got a 1 combo 2 down, combo 2 up, right? That triggered here at this 36.15 level, and the magnitude is not the high of the 1, but the candle to the left of the 1. So that's this big green red 3 or bearish engulfing candle from 2024 with the high of 70.08. So as long as we're above 36.15 and we're in this 1 combo 2 down, combo 2 up, we could combo into another 2 up next quarter if we don't reach it, but the ultimate magnitude for that move is 70.08. And then looking at the year, again, if you're familiar with the channel, you know how we've turned this around. We had a 1 2 up 2 down trigger at the beginning of the year, but that's been almost reversed, right? As close to reversing as you can without going bullish engulfing on the year, right? We did not reach magnitude. Magnitude on that move was the low of 2022, which was 621. We got down to the 723 level and then bounced, right? So with that bounce, we've created a nice solid green hammer, at the same time creating a higher low on the year chart, and again continuing to move to the upside. So not a whole lot that I can say to negatively, and still just trying to maintain focus and not get too far over our skis when it comes to looking to the upside as well, right? Because we know that we've had a pretty extended push, and we need to continue that push if we're gonna stay in these, especially like November, December plays. January, we still got a little bit more that we can work with, but just want to continue to monitor those November, December plays, especially if you're in some pretty good profit. You don't want to give that up, right? So next, let's actually look at the market maker's expected move. And to do that, we go to the options chain for SOXL, and we can see this is Thinkorswim. Then looking at the options chain for October 31st. If we go over here to the right, we see this number in parentheses, plus or minus 3.527. We'll round that to 3.53, but that's market maker's expected move. So a plus or minus 3.53 move when looking at the close price today. So with the close price being 47.39 on Thursday. Let's go to our notes here. With the close price being 47.39, you add 353 to that, you get 50.92. You subtract 353 from that, you get 43.86. So we've got a range, pretty big range for just a day, right? It's a pretty decent move. Of course, we know that we've had the earnings overnight, so that's one of the reasons why we're seeing a bigger number here. But we see we've got a range of 50.92 to 43.86 is where the market makers expect price to be within that range, right? So let's just go to our chart here. Actually, I forgot to remove today's gap, so I'll take that off of there. But let's just go back to the chart and just look at it from go from the 15-minute perspective. But we can see we've got it marked out for tomorrow. At the bottom of the screen, we've got market makers expected move low down here at 43.86, and went up at the top of the chart. We've got market makers expected move high at 50.92. Right, you can see that how that 50.92 lines up with one of these fib extensions as well. So as well as the market makers expected move low. So good reason why you could see those the prices going to those levels, right? So we've got those marked out on the chart. Let's look at let's zoom back in here and get our 4-hour markers and triggers and targets ready for Friday. So what we've got on the chart here, oops, if I can bring everything into perspective. Might be a little too small for those of you on the phone, but I will do my best here, right? So we can see that as far as the 4-hour markers, we got previous high day up here at 50.76. That's pretty much lining up with the market makers expected move high of 50.92 as well. We've got the overnight high as of now at 48.66. It could continue to push up overnight. Who knows? It could be the ultimate high for the night, right? Overnight low is lining up with the previous low a day here at 47.31. Kind of hard to see as these levels overlap, but that's the 4-hour trigger to the downside as well. The 4-hour trigger to the upside is right up here near the market makers expected move high for the week and the overnight high. So you can see a lot of these levels holding some weight because there's multiple points of interest or inflection points or whatever that are overlapping at these levels. And then of course we've got down at the bottom of the screen below the gap from Tuesday to Wednesday. Below that gap is the market makers expected move low at 43.86. So just looking at taking into account just the 4-hour markers at this point, so we can make the chart a little bit bigger, right? So we got previous high a day, overnight high, previous low a day, and overnight low pretty much the same place, right? Let's say 48.66 is the overnight high, and by the time we open, we've pulled back a little bit, right? And we open up at 48.12. Well, for Friday, at least in the morning, scalping early on, what we want to do is we want to see, price opens here at 48.12. Do we push up or down? If we push up, do we reject off of market makers expected move high or overnight high area and get a pullback? And once we get that pullback, we're going to be looking for a higher low at or above the opening print, right? If we get a higher low at or above this level, we want to enter calls. Now, the first target, if we were to enter calls, is the overnight high. You may not be able to get in until overnight high, depending on where the higher low takes place, whatever. But you're not going to want to exit at overnight high, right? There's no point in getting in for that move. What you would want to do at the next target at that point is previous high a day. So you'd have to look out for these fib extensions on the way up. Just know that you could see some sideways action or even a rejection off of those levels. But the ultimate target for the scalp move in the morning would be that 50.76 previous high a day. Now, if we open here at 48.12 and we push down, maybe we get a bounce off of overnight low and we push back up. When we get this, lower high, maybe at price opening print or just below opening print, we want to get into puts, right? Now, the key thing here is there's not a lot of magnitude from the scalp perspective, because our targets from a scalp perspective, early on in the morning are just overnight low and previous low a day. So you're going to want to flip to your 4-hour targets and your 1-day targets at that point. If we do get price action to the downside. But from a scalping perspective, that's what we got, right? Not a lot of magnitude from the downside if you're just looking to scalp something quick, unless you're, wanting to look for the further out targets on the 4-hour and the day that we'll go over here in a second. A lot more opportunity to the upside if we're looking at just the 4-hour markers, right? And that's the more, that's the repeatable strategy that we're talking about. Early in the morning, just buying higher lows at or above opening print, buying puts at or below opening print. And that's how you can kind of work things in the morning to your advantage, right? Then as the day starts to play out, you can see how price action is moving, and you can make a better informed decision about any intraday plays that you might want to play. But to just start out, if you want to do something in the morning, this is a good way to attack it, right? So let me remove that, and let's switch to the 4-hour chart, and let's just look at more of a intraday trade perspective. Just look at the 4-hour chart again. I just want to bring into focus that yesterday did trigger the 1-2 up, 2 down, and we've continued it on Thursday, right? So that continuation of the 1-2 up, 2 down. Just want to continue to watch out for any further push to the downside, right? I pointed out our levels of support before, last year's 50%, which was resistance before, so you'd want it to turn into support. But we do have the weak flip as well. Now, if we do break through that weak flip, we've got the gap. We've talked about how the half gap level is a lot of times an intraday bounce point. So we'll keep that in mind as well, just because, we're going down, but it's in the face of a pretty strong uptrend. So we don't want to... we want to have we have our magnitudes for moves, right? But we don't want to get overly excited. We want to at least have some intermediate levels on the way down, just in case we do see those the price bounce. We're not surprised, right? We're in a pretty crazy uptrend right now. Like I said, some people call it parabolic, some people whatever, blow off top. I don't know what you want to call it, but I mean, look at this movement, right? Just up since April. So, that's what we could have to the downside. That 1 combo 2 down, combo 2 up. Magnitude would be the low of this 3 here. And again, we've got the further targets on the downside with the gaps calling. Now to the upside, we get the 2 down, 2 up, and that could domino into a 2 down combo 2. Combo 2 down, 2 up. To push back to the week high and the market maker's expected move high for Friday. Very, very clear entry here at the high of the 2 down. Your first exit, if you want to scale out, would be the high of this candle, then this candle, and then the magnitude for that move would be the high of Wednesday's candle at 50.76. So we'll look at the hard numbers here in a second. That's for more of the intraday play, maybe overnight play. You want to look at the 4-hour, but for the full day trade and better look at the overnight swing. We want to look at this day chart, and again, we put in the 2 down on Thursday, right? So is this going to be set as the higher low, or do we continue to push down? Again, a lot of room before we would set a lower high. In the market maker's expected move, low is down below this gap. So from a full day's perspective, it wouldn't be too crazy to see a move that would to make it to the market maker's expected move low. I mean, just look at this candle over here. Right, this candle here. We can easily make those types of moves to the downside very quickly with SOXL. It's a triple leveraged product, so just be aware of that and be ready to capitalize on it. Right, whether capitalizing on it, and that can mean a couple of different things. Right, you can capitalize on it by just not trading. Right, if you are not comfortable buying puts, if you're not comfortable trying to identify pullback bounce points and things of that nature, then just don't play. Right, that's sometimes the best play is not playing at all, right? But at the same time, if you've got these triggers and targets and you're comfortable with playing puts, when it triggers, enter, right? And then when it hits those targets, make sure you exit, or at least exit a good chunkier position, if not a majority of the position, and leave minimal runners out there, just because again we're in the face of this uptrend. We're coming into levels of support. So if we do bounce, you don't want it to just totally, rip apart your trade, right? If you've only let go of half the position, and then the second half gets blown away, then, it's kind of a worthless trade to begin with. So just to be aware of all that, right? So let's go to the notes here and just look at the hard numbers. All right, so this is for Friday, October 31st. Just a reminder, only 40 trading days left in the year, and the close on Thursday was 47.39. We know where the week flips red, and then quite a bit lower the month, the quarter, and the year will flip red. But we would have to get to 45.49, which we've pointed out on the chart a couple times. We've talked about the market maker's expected move in that range. We know where our gaps below are, and we do have one more gap above. A little bit of ways. These gaps to the downside are obviously closer, but just want to keep in mind where those gaps are. We went over the scalping rules, right? Higher lows above opening print, we want to get into calls. Lower highs below opening print, we want to get into puts, right? Looking at things from the 4-hour perspective, again, if we go to the downside, that's a 2 down continuation, just looking at a 4-hour candle to 4-hour candle perspective. But if looking at the group of candles that we've had most recently, that would give us a 1-2 up combo, 2 down, triggering at 47.27, targeting 46.70 as a possible bounce point, but the ultimate magnitude for that move is 45.94. Now, if we go back to the upside, we get the 2 down, 2 up on the 4-hour, triggering at 48.76 with a magnitude of 49.97, and then we'll put an extended target out there of 50.25. All right. Now, if we get to that 49.97 level, that triggers the day, right? So from the day, we'll talk about the downside first. The day would be a 2 up combo, 2 down, or a combo 2 up, combo 2 down, depending on whether we reach this 45.94. But for the 2 up combo 2 down, the trigger is 47.27. We go below that. The ultimate magnitude for that move on the day chart is 45.94. Not saying it would happen all in one day. Again, we are kind of in the face of an uptrend. So if it's just a slow meltdown, we may not make it there. Maybe we make it there on Monday. Do keep in mind that Monday is the third. The first, second, third usually happen to be the best, most positive trading days of the week. People getting their checks and things like that. 401ks making investments. So again, another reason to kind of temper your thoughts on how far we might fall, even though we do have those 2 gaps below us, right? It's perfectly reasonable to think that we could push down, bounce off that gap and go, run off further and come back and visit those gaps later on next year, whenever down the road. But to the downside, 47.27, magnitude 45.95 on the day chart. We've got our extended targets here, including the half gap and the gap close if we really get to running to the downside. And then to the upside, we would have a, so 2 down, 2 up, right? Triggering at 49.97 with a magnitude of 50.76. And then we've got our extended targets of 51.91, 53.15, and 54.42. Those are fib extensions from the charts that we had out there earlier that we were able to identify. Now, from the week perspective, I won't go back to the charts for the week, month, quarter, and year. We looked at those earlier on in the video. If you want to go over those again, just go ahead and rewind. But from a pure numbers perspective, from a week, we've gone 2 up, 2 up. That triggered at 44.16. We've already hit 3 of the targets. As you can see, we added a couple more today. Because 51.91 was the last target that we had. But if we do end up going ballistic and go past 51.91 at the end of this week, during Friday, we do have some other extended targets. I don't think we'll really reach those levels, but that's got to have them out there in case, right? For the month, again, we've gone 2 up, 2 up. Nowhere close to going back within that price range from last month at this time. Again, hit multiple triggers on the way up, so we went ahead and put some more out here for us because the higher high is pretty far away here at 70.08. So got some intermediate targets on the way up as well. The quarter, again, the one chart that I'm most excited about, we triggered that 1 combo 2 down, combo 2 up when we reached that 36.15. Got a couple of these targets out of the way, and again, I put some more on here on our way up to 70.08, because as long as we're in this one combo two down, combo two up above 36.15, 70.08 is that ultimate magnitude. All right. Then the year we talked about, yeah, we went one, two down, two up, but we were able to reverse that, make a higher low so far, and turn into a nice green hammer. So we talked the last couple of months about how we don't think we'll hit 70.08 this month, even if we triggered this one combo two down, combo two up. But I mean, $30 isn't. I'm sorry, $20 isn't too much to go when you're talking about SOXL. Again, triple leverage product. So I guess I'm putting the possibility of a green 3 on the year on the table, right? I'm not saying that's going to happen. I'm not calling for that, but like at this point, it's reasonable to think that it could happen, right? There's 2 more months of price action. If you think about, we were in May, so that's April. So it's May, June, July, August, September, October. So in 6 months, we've gone from $7 to $47. That's $40 in 6 months. Divide that in 2. That's 3 months that it would take to move $20. So I mean, the right catalysts, we could get to 70 by the end of the year, which would be pretty amazing. I didn't think that would happen. And again, I'm not calling for that to happen, but you see how it can be an actual possibility at this point. So yeah, I'm kind of rambling at this point. I'm sure everybody's ready to get into their Thursday night. If you're watching this Thursday night, if it's Friday morning, your night been gone and over with. So hope you got some good rest. But yeah, hope everybody gets some good rest on Thursday night and ready to trade on Friday. And we've had a lot of just sideways days this week, so it wouldn't be the end of the world to just not trade tomorrow, especially if you're not a scalper. Just make sure you're monitoring any swings that you may be in, and take it light into the weekend, right? You don't have to trade every day, right? We've come up with the strategy where you can, but you don't need to. So just be smart with what you do on Friday, right? Don't give back any profits that you've made this week. It's not house money. That's your money, right? You need to pay yourself at some point. So there's no point in giving that stuff back. Just go ahead and ease on into the weekend. If there's no great setups for you out there, don't force anything. And then you can look forward to having a nice weekend, right? So again, hope everybody gets some good rest or got some good rest, and look forward to trading out there with you.